From the UK's perspective, the core objective of this deal has been to reduce some of the steep tariffs, especially those hitting the steel and automotive industries the hardest. In order to secure those reductions, the UK has had to offer some concessions. According to what I've learned, those compromises primarily involve agricultural trade, specifically food and animal products imported from the United States. The terms governing those imports are expected to change, although we're still waiting on the full details. A government source has suggested there will be benefits for British farmers, though they didn't specify what form those might take. What's clear, however, is that cars and agriculture are the central pillars of this agreement. To put all of this in context, let's take a broader look at trade between the US and the UK. When it comes to goods, trade is relatively balanced. The UK imports around £62 billion worth of goods from the US and exports approximately £66 billion in return. These goods are the ones currently affected by blanket tariffs, something this deal seeks to address. However, it's important to remember that the real value in UK-US trade lies in services. The UK exports £137 billion worth of services, everything from legal to financial, to the US. These aren't subject to the same tariff regime, but it's the goods segment, particularly the so-called blue portion, where the tariff battle is being fought. Let's break down some of the key tariffs in play. Steel and aluminium are currently subject to a 25% tariff, originally introduced under President Trump. Cars face the same 25% tariff, and UK goods more broadly face a 10% global tariff. Notably, pharmaceuticals, one of the UK's major export categories, currently enjoy a 0% tariff, though there are concerns that could change in future. Focusing on cars, the impact of tariffs becomes crystal clear. The United States is the UK's single largest car export market, worth £9 billion annually, accounting for 1 in every 4 vehicles exported. That's more than twice the value of exports to China, and quadruple those to major European markets. In contrast, US car exports to the UK are valued at less than £1 billion. Tariffs may well be one reason for that imbalance. Currently, the UK imposes a 10% tariff on imported cars from any country it doesn't have a trade deal with, including the US. There's also a 2% digital services tax that, while not a tariff in the traditional sense, affects American tech firms and could become a factor in broader negotiations. Then there's agriculture, where UK tariffs are used to shield domestic producers from cheaper imports. For example, pork and chicken are subject to tariff quotas, fees based on volume. Beef faces a 12% tariff plus a volume quota. These tariffs are likely to be reduced under the new deal. What isn't changing, according to ministers and sources, are the regulatory standards for food. US beef, for instance, is often hormone-treated, something that remains banned in the UK. Similarly, the long-debated issue of chlorinated chicken isn't part of this deal. That's partly because the UK is also working to rebuild trade relations with the EU, and relaxing food standards could jeopardize efforts to ease border friction with Europe. In short, there may be concessions on agriculture, but if the UK can both lower tariffs with the US and maintain regulatory alignment with the EU, this deal could represent a meaningful win on both fronts.